Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is Alain Corbani. He is the portfolio manager at Finance SA. Welcome to Wall Street Silver, Alain.
Thank you very much, Yvonne. It's
Yeah,
a pleasure.
yeah, it's a pleasure having you on. So the economy is on fire, and Janet Yellen just came out this week and said, you know, she was wrong about inflation. So where do you see the Fed going in the next 12 months? Will they pivot? Will they pause? What's your opinion?
Well, we'll start by disagreeing with your first statement, if you don't mind. I don't think the economy is on fire. Actually, the economy is decelerating, and the forecast of the Federal Reserve for 2022, which was revised, kept being revised downward actually, or over each FOMC meeting, is now has set the bar at 2.8% growth rate for the US economy in 2022. So now let's do the math if you don't mind. We had in Q1 2022 a negative growth, minus 1.4 if I recall. The Federal Reserve of Atlanta is forecasting for the second quarter of 2022 a growth rate of 1.4%. So explain to me how we can reach 2.8% of average growth rate for 2022 when we'll be in the best case flat in the first semester of 2022. That means that the economy will have to grow by more than 5% in the second semester of 2022. And this is a non-starter. So basically the economy is decelerating, whether it's global or for the US. And the forecast of the Fed for a 2.8% growth rate is going to have to be revised downward. So the economy is not on fire. The economy is decelerating. That's number one. And the market has already priced in the move of the Fed all the way to 2023. Because the Fed funds rate, again, based on the Fed's projections, are sitting by the end of 2023 at 2.8%. And look at what the two-year notes are yielding. They are yielding at 2.6, 2.7%. So basically, the market has already priced in the intervention of the Federal Reserve over the next year and a half.
Going forward, though, are you expecting a pivot from the Fed? As in, I think everyone's wondering right now, as you said, the economy is no longer on fire. It's decelerating. A lot of our economic numbers in the United States are getting progressively worse. Do you think the Fed, all the pressure right now is on inflation?
Yes.
Is the political pressure going to change at some point where the Fed has to think, all right, we have to save the economy now, ignore inflation? And
yes.
is that when gold and silver start really taking off? Once the Fed has to make that decision?
Indeed. Again, the markets are forward-looking, and they've been telling us for the last couple of months that the Fed is close to be done tightening. Now, for the Fed to change course or to pivot, or you use the word, the adjective you want, we need to see inflation slowing down. As you very well said it's a political agenda now, because we all know, or we should all know, that inflation is also decelerating. If you look at the statistics that are published on a monthly basis by the Federal Reserve of Cleveland, you do see that on a monthly basis, on a sequential basis, pressure on prices is decelerating. So, but inflation is still high. And there are a lot of people, especially the lower middle class in the US, voters for the Democrats, who are really suffering today because of those high prices. So you do need to see further deceleration in inflation numbers. And this it takes time. It won't happen overnight, but this is the trend. And once we get to a level that is reassuring enough, the Fed will probably do the stop and go, but send the message that there will be a slowing pressure, a less intense pressure on the Fed to tighten in an aggressive way. And this will take probably a few months for this to happen and to be digested by our politicians.
Alain, what's your alternative to the US dollar? Like, I know you're in precious metals, but are you in any commodities?
We don't believe in the commodity super cycle.
No.
The theme of the commodity, for the simple reason that if the economy is decelerating, how do you want to have higher commodity prices? Maybe some commodities will take advantage, and they are taking advantage of that green theme of the green technology.
Mm-hmm.
But this put aside, I don't see how it doesn't make sense to have a slower growth, a slower demand, and higher commodities. They don't go hand in hand. It's not logical. And at some point, you will have more copper mines coming into production. You will have some producers which will relinquish on their pressure to keep their cost in sync, and they will produce more from probably more marginal assets. But the reality is that lower growth means lower demand, means stable at best commodity prices. So we do see a huge boulevard ahead of us for the precious metals.
In your opinion, Alain, has the dollar milkshake theory taken effect? Has it begun, and will it crush the global economy?
The US currency, the dollar, the US dollar is counter-cyclical. Mm-hmm. This is what you have to remember. So if things are ugly out of the United States, everybody's going to go and want to buy some US dollars. So the dollar is strong, of course, because you have a spread of yields. Yes, between the US and Europe or other Japan or other Australia. Mm-hmm. But the reality is that if things go well globally, there is no reason for the dollar to outperform. The dollar is outperforming because this is a safe asset, literally. It is a counter-cyclical currency, and it's a safe asset. This is what is happening. So we have really many items that are piling up in favor of the US dollar. But keep in mind that the only efficient way to trigger more growth in an economy, it's to have a weaker currency. That's the most efficient way to get growth, having a weaker currency. A strong currency prevents you from being more competitive, and therefore from developing an economy that is growing above par. One more thing about the economy, the US economy. Mm-hmm. Over the last decade, with low rates, very low rates, by historical measures, we haven't been able to go beyond 2%. 2.5% max was the max. So now explain to me how, with yields that have reached nominal yields that have reached the 2009-10 levels, the 2018 levels, with a GDP, debt to GDP that has gone up by 20% over the last 3 years. Explain to me how, with a monetary policy that is tilted towards tightening, and with a fiscal policy that is also meant to be less excessive. Mm-hmm. Explain to me how do we expect to have a growth rate higher than the one we had over the last decade, when we had less debt and when rates were more appealing to investors? So this doesn't make sense.
Right.
And that's why it's just literally common sense what I'm saying. You have more debt, your economy is slowing down, and you have your currency that is preventing you from being competitive. This will end at some point, and it will end, and you referred to it, when inflation will decelerate in a meaningful way. We have seen it over the last 3 months. Inflation is decelerating, and this is based on a sequential monthly statistics. Don't look at the annual statistics comparisons. They don't make any sense. You have to look at what is happening really in the last few months. And in the last few months, from a peak inflation of 7.5%, 8%, we're down. Literally, we're running, depending whether it's core or not non-core PCE, but we're now running at around 4%. So a 4% core PCE is not hyperinflation, you see, and
Right.
it gives some reasons to the Fed to be optimistic and to be able to, maybe in a month, 2 months, 3 months, change the language. And the language will be, you know what, we want a soft landing. That has always been the case. And for that to happen, we need to realize that a slower growth means ultimately less pressures on prices, and less pressure on prices allows us to be less aggressive tightening and allowing us to reach our objective of soft landing. And because the last thing the Fed wants today, the last thing is to be to trigger a recession.
That's the big debate right now about whether the Fed is trapped or not. There's no good options here. Inflation's out of control. Let's say they get rates up to, let's say, 2% or 1.5% on the Fed funds rate. That's not going to be enough to bring inflation back down to their target of 2%, right? It's just
But this is irrelevant, Jim. This is irrelevant because the market has priced, or look at the 2-year. The 2-year is the proxy for the Fed fund rates. And the 2-year is already yielding 2.6%.
Okay.
So the market has priced in a Fed that will move its Fed fund rates to 2.5, to 2.6, maybe 3%. But really I'm telling you that really this will not happen.
Yeah. Okay. I think a lot of people agree. I mean, even if they raise rates another 50 basis points, another 0.5% at the next meeting, that'll put us at what, 1.25. Then they do 50% or 0.5% at the next meeting after that. That puts
exactly.
Us at
Exactly.
They're not going to get there. This economy is going to be cratering before that. People are going to be crying in their Cheerios before that. I mean, people are going to be drunk, drinking all the French wine. It's all going to be gone long before any of this happens, right? So
yes, well,
all
this is why.
That's when the Fed's going to pivot, right? And that's when gold and silver shoots the moon, right? I mean,
yes, and this is why, again, back to what we were saying earlier, this is why, despite higher nominal rates, higher real rates, a higher currency, gold has behaved, very well. Very well, beyond any possible expectation.
The fact it's not falling in this environment with a strong dollar and raising rates, and gold is basically flat and holding solid.
Yes.
And silver also, to a lesser extent, seems to have a floor right now at 21, 22. Silver won't go down anymore. It's like people are saying, this is the bottom. It's not going down. It's holding strong here. It's like all we're waiting for right now is the pivot before these things just freaking launch, like 2008 to 2011.
For silver to outperform gold, and it will outperform gold because it has always done it in the past in a bull market. For this to happen, gold needs to have regained this assurance. And once we have regained this assurance that gold has a perfect path to increase in value, this is when silver will react. And this is where you want to be invested in silver companies, because they have much more torque than gold mines. So
do you have any favorite? Well, I've got you on that subject. What's your favorite? Do you have any favorite silver or gold companies that you really like?
we do, but we cannot promote the names we
It's just
invest
between
in.
you, me, and Ivan. I won't tell anyone else. Just you, me, and Ivan. Our secret.
I
Everyone
wish
else, stop
I
watching.
wish I could. I wish I could, but I will remain disciplined. So this is how you want to look at it. It's really
Yeah.
patient. It's about patience, and it's about signs, signals that are being very promising on the inflation front. And again, just everybody's talking about oil right now, and food prices, but imagine a second, why don't we just, why do we only focus on bad news? I just don't get it.
Right.
Why don't we also have a balanced approach about the analysis of what's going on in this world? Why don't we think that, this conflict in Ukraine, I mean, it will ultimately end one day. And I am an optimistic person, and I do believe that we're closer to the end of that conflict than at the beginning of this conflict. That's number one. Number two, look at what's happening between the American government and the Saudis, and look at what's happening with what has been suggested recently, that maybe the Americans are going to allow Iran to sell more of its oil officially, without renegating on their position on the nuclear subject. So, and imagine the fact that the OPEC plus, and they are talking about it now. It's not any more speculation. They are talking about, maybe we should put aside the production of Russia and just look at how we can provide more help to the countries are consuming, importing our oil. So there is, and look at the US industry, oil and gas industry. I mean, CapEx have increased by 15 to 20%. So this will translate into higher production of oil and gas. So between a slower growth, I remind you that between slower demand, and higher, potentially higher production, more supply, it makes a lot of sense not to start wondering whether we haven't also reached our peak oil. So what I'm saying is that it's too late now to be ultra bullish on oil prices. Every piece of the puzzle is telling you that the odds for oil to either remain at these levels or go lower are much higher than oil going higher.
Hey, last question for you. Do you have a target for gold this cycle? Medium term, long term target? Do you do targets?
We don't do targets, but
give us a clickbait title.
I always look at the profitability of the industry, always, because basically this is our job, to invest in mining companies. And I expect that this cycle will not be any different from the previous cycles. And I expect those mining companies today, which are producing at a net margin of 7.5, 8%, that they will be producing at a margin of 25%. So for that to happen, I let you run the numbers, and this will give you a target for the gold and silver prices.
All right, so I'll just say you predicted 10,000 gold, right?
All right. That's a good target.
Listen, for our shareholders, this is the perfect scenario, but I don't sell $10,000. I'm much more pragmatic than this.
All right. Well, thank you very much for joining us. We really appreciate it. And we'd love to talk to you again in the next couple of months as this develops this year.
It's a pleasure. Thank you very much.